Right, we are going to talk about one of my favorite topics here, which is insurance company selection. How do I choose the right company when it comes to maximizing the cash value in a whole life insurance policy? Because not many people talk about it. There's one group I've seen talk about it. There's a couple individuals, but one reputable group, the Insurance Pro blog. I like those guys where they put a lot of content out and they do give a thorough analysis on just about every company out there, which is good. They're big on transparency. But when it comes to maximizing the cash value on a life insurance policy, my big thing is actual performance compared to illustrated performance. What companies have actually delivered strong cash values to consumers? Meaning not just projected great values and then we don't know what happened or they under-delivered, but projected values, whether they looked good or not, but then actually delivered solid values. Well, the first thing to look at here, because we've got proof on this, is copy a successful formula. When I run a business, I want to copy business owners and corporations that have already figured it out. Ideally, I'd like to prevent the need to go through a lot of the growing pains and mistakes they've made. So if I can hire a business consultant or coach that can help me maneuver, navigate around the mistakes and get on the path where it's just straight and I'm gonna be as successful as possible, that's what I want. Same exact thing here. So copying the wealthy. Who do banks, corporations use? We just put a bank-owned life insurance policy in force, two of them actually earlier this year, two different companies I should say with one bank, and who they used, which just about every corporation we see out there uses these guys, 4 major mutual carriers. They use 2 of the 4 major mutuals. I can't get into the specific names for a reason. However, what I'll add, or what I will state is when it comes to actual performance, companies that have consistently delivered strong cash values to consumers, we have seen these carriers consistently deliver strong cash values and death benefits, short-term and long-term, to policyholders. Now, what I'll add here is if you're interested in a whole life insurance policy and you may be considering a number of products with a number of different agents and individuals, make sure you at least ask about these companies and see some information, see some illustrations, guaranteed and non-guaranteed. But if you're looking at other carriers, ask for the actual proof. To go off on a little bit of a side tangent here, and I'll come back, is in my years in the insurance industry, so I'm in my 10th year now. However, in working for a firm that designed policies for corporations, the biggest item of buyer's remorse that came up is individuals would purchase policies years back expecting them to produce certain results. The policy under-delivered, and then the consumer was dissatisfied. They were not happy because they were sold on something great, and then it didn't produce, didn't pan out. What we've seen as far as companies that have consistently delivered and consumer satisfaction has been high, has been with these 4 major mutuals. Again, I'm talking about actual performance, net internal rates of return, on cash value and death benefits for that matter. So if I am paying any amount of money into a policy, let's say I'm paying in $1 for the next 30 years, and I'm going to pay that exact same dollar in for the next 30 years, nothing's going to change, and we can design the policy in the same manner, you can close your eyes and pick one of these companies out of a hat. Hard to go wrong with any of them in that respect. The biggest factor that will help refine your decision-making process, because I still have 4 companies here, and there's a lot of smaller companies out there that have a ton of great benefits in terms of flexibility and such. I just mentioned that word flexibility. This will often refine our decision-making process. Meaning, if I'm interested in a cash value life insurance policy, and I want the ability to put in, call it $100,000 per year, but I do not want to receive a bill for $100,000 per year, we can literally design a policy where perhaps I commit to, call it $10,000 per year. Maybe I break that up over monthly and pay between $800 and $900 a month, and then at my discretion, I add up to $100K per year. Whether I hit it or not is completely up to me. So that's where, not just these companies, but every company out there, it's beneficial to be aware of the flexibility features. How flexible are they short-term, long-term? Can I easily add money, or is it difficult where I have to jump through loopholes? That's something we do, and a lot of experienced agents are familiar with flexibility features with different insurance carriers. But flexibility, and then policy design, this is critical with any company. Let's touch on this real quick. We often go through this, right? When we design a policy, where can my money go? The premium or the PUA component? Dollars that I pay toward the premium in respect to my cash value, I'll often see zero in the first and second year. And the reason why is that the insurance company is going to overcharge me for the cost of insurance or death benefit up front. As you hit the third year, and from that point forward, you will begin to see whatever my base premium payment is, I'll refer to this often as the initial insurance expense, will begin to capitalize the policy. I'll see those premium payments come back to work for me. They'll be in cash value that will be accessible. Things start to pick up, the cash value growth that is. Now, the PUA component, I'll refer to this often as a cash dump-in. Our friends love that term. So here, if I pay $1,000 per year into the PUA component, I will see just about $1,000 show up right off the bat. That is money I have access to and begins to produce the guaranteed rate and any dividends right off the bat. This is the key to maximizing the cash value growth on a life insurance policy. Now, the term PUA stands for paid up additions, and all that means is it purchases me paid up additional life insurance. Why it's paid up is it is optional to add money here, whereas the premium is a fixed bill, however long the policy is payable for. So going back to policy flexibility here, right? Because what might refine my decision-making process between these companies or any life insurance company is how flexible they are. Most individuals we work with, that's it. Meaning I want the ability to put in that 100,000 or maybe it's 10,000 per year, but I don't want to get a bill for that amount. So I can easily commit to a minimal amount and add more funds at leisure. But here's the main thing. Knowing that my money can go towards these two areas, wherever I set this premium, the key is this. How do I minimize it relative to what I want to be able to pay into a policy per year? For example, a lot of times with these larger carriers, you'll see a 10x limitation. And what that means is if I want the ability to pay in $10,000 per year, I can set my premium at $1,000 per year. This gives me the ability to commit to a minimal amount and add up to $10,000 at my discretion. But the purpose of this video was actual performance, choosing the right company, what company or companies have provided proof that they've actually paid strong cash values to consumers. We've seen these four guys do that. And by the way, whether you work with us or not, I'd encourage these carriers. We can't even use these guys just based off of their setup. So Northwestern Mutual, quality company when you look at their historical performance. However, their setup is somewhat exclusive to career agents that use them first and foremost. So you've got to be a Northwestern Mutual agent to use them. We were with them at one point years ago. We're not anymore, but only good things to say about them because they are in that category in the sense that they've consistently delivered strong cash values to consumers. So all in all, I would always recommend one of these four carriers. We're going to look at some actual data in the next couple of videos, which will be fun. But as always, I hope this helps, and we'll talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.